Well, there we go. Welcome, everybody. And we see everybody starting to trickle in there, Andy.
Perfect. There we go. Yep. Slowly getting there. Awesome. Okay, I'm gonna try this first. Um, Now that we're getting people in here, we're gonna start filtering in pretty soon. We're gonna get started right away. But first, who's ever in here, can you let us know in the chat that you can see us, you can hear us, make sure that stuff's all working. I'm gonna try it here too. Because that's going to be the biggest thing throughout this whole thing is that chat, just because nobody's really able to talk on here. So,
Oh, perfect. Thank you, Natasha. Appreciate it.
yeah. We're gonna get started right away here. We got a lot to cover. We have a lot of things to cover. We're gonna try and get you guys out of here at a good time. If you guys have any questions while we go through this, and it's gonna be going at a faster pace, use the chat as much as you can. We're gonna ask that you ask as much as you can. If we can't get to your questions right away or during the webinar, at the very end, we're gonna hang around and answer any questions that anybody has and do some Q&A at the end there. And then I'm also, what was the other thing? Oh yeah, this is recorded too, just so everybody knows. So if you have to jump out and jump back in, or you miss something, or whatever you want to recap at a later date, is being recorded. I'm going to send the recording out most likely either tomorrow or Friday. And if you guys don't see it by the weekend, reach out to me. I'll make sure to get it to you guys directly. But sometimes it does wind up in a spam folder, but check that too, just in case. But yeah, we're getting more rolling in here. We're gonna get started soon, but you're gonna see, I'm gonna put this in the chat too, just for everybody. This here is a booking link. We're gonna keep posting that in as we go. It's a booking link to focus one-on-one with you. So if you have some more things to talk about on a more one-on-one basis, more personal basis, or you want to find out what you can do to get approved and things like that, book that call with us. We're happy to book a time with you and talk about what you need. So don't worry, I'm going to be plugging that in as we go here. So it may get lost in the chat, but I'll just keep punching it through. So again, welcome everybody. I appreciate everybody being here so far. There's for the people that are just joining now, this is recorded. You'll be able to catch up on it soon. If you do miss something, and yeah, we have a lot to cover. So there is two of us on here, Ryan and myself. I might as well say hi for a minute. Ryan, we'll get into introductions in a little bit here while we let people trickle in. And yeah, Ryan's most likely going to be running the chat for most of this while I speak on most things. But yeah, we got enough people for now. We're gonna start rolling through again. If you got to jump out, that's fine. It is recorded. So, for the people that are here so far, again, thank you very much for joining with us today. Once I get this going here, so when you guys did book and sign up for this, I did promise you that I'm going to be giving a free book for you guys and a buyer's guide. That is absolutely true, 100%. This is the book that you'll be getting a copy of. It is an e-version, so you can read it on anything, your phone, your tablets, your e-readers, things like that. It is coming to you in that same email that the recording will be in. Like I said, it's going to come to you on Thursday or Friday, one of those days. And if not by the weekend, let me know and I'll get it to you. That plus the buyer's guide will be coming to you. So again, thank you everybody for joining us today. We appreciate it. Hopefully you guys are going to get a lot of things answered for you here. So before we really get into a lot of things, this is a first time home buyer webinar. I'm gonna guess everybody that's on this call right here has never bought a home before. I know there's a lot of things like there's a lot of information out there. There's a lot of misinformation out there, especially when it comes to social media, word of mouth. Sometimes things get skewed. So if you guys are feeling any of this because of what you've heard or what you've been reading about, let us know and it's fine. This is very normal when it comes to buying a home. For the most of us, we've never bought a home before, and it's going to be one of the most expensive things we'll ever buy in our life. It is a very good investment. So if you're feeling any of these things, that is fine. That's completely normal. We've all been in this situation before. The goal for this is that we're going to alleviate a lot of these by at least giving you the idea of what you need to do to start, what it takes, and some things to avoid when buying your first home to save you some money, and then we can take it from there. So don't worry, we're going to get into all that. So before we really get into this too, I want to do some introductions so you do know who it is that's talking to you, and that you know that we are qualified to talk about this and we know what we're doing. So first and foremost, I myself am Andy Goddard. I'm a realtor here in Saskatoon. I am with Realty One Group Dynamic. I have built a team this year. We are with ANC Realty, so myself and Connie on the right there. We started this team, and then we have a buyer's agent, Jessica, who's on the left there. She's a newer agent, so she's kind of learning stuff with us. We're helping her out. So that's the team that's going to help with real estate. Of course, my goal is to help everybody here. I'll be the one in charge of everything, but if needed, I have a team that can step in and help out where is needed. I've been doing this since 2021, so I'm going on almost 5 years now of doing this. I live in Warman, but I do service Saskatoon and surrounding areas. I am licensed in all of Saskatchewan, but I typically stick around Saskatoon and kind of around that in a certain radius. I've been here since 16 in Warman. That's where I married my wife, have 3 kids now. But I've been born and raised in Saskatchewan. I've lived in Maple Creek pretty much my whole life, but I decided to move here to be closer to family, and started doing this, and I love it. I love helping, whether it's new Canadians, people that have lived here their whole life, anybody call Saskatoon and Saskatchewan home. It's such a good feeling. So again, I am Andy Goddard with ANC Realty, the realtor here. I help with all the buying and selling of real estate. So when it does come to buying your first home, the majority of us do not have the funds. They don't have the cash to purchase their first home. They do need financing, and that's where the mortgage comes in. And that's what also makes this team great. This is my real estate team, but without Ryan, that doesn't work, because we also need a guy to help with the finance things. And so I'm going to pass it over to Ryan, but he is at 100% as part of this team as anybody. He does fantastic work when it comes to getting you a mortgage. So I'll let Ryan introduce himself.
Oh, well, thank you so much for that warm welcome, Andy. It's such a wonderful experience to work with a team of people that are so well versed in what they do. And having Andy and his team on the buying and selling and the real estate portion, working with them from me as a financier, and really helping people out on the mortgage side. We kind of cover all bases. And of course, we also deal with a whole host of people within our group, lawyers and inspectors and things like that, that really make this a one-stop shop for you all the way around. So I'm absolutely ecstatic to partner with Andy and his team. As Andy mentioned, we do kind of cover all the entire province, not just Saskatoon. I am born and raised in Saskatoon. My name is Ryan McEwen. I work with TMG, the mortgage group. But as Andy mentioned, we do cover the entire province. We are licensed all the way across Saskatchewan. And, just for example, I'm working with Andy's partner, Connie, on a deal here in Regina. So we can deal with, a small town or something outside of Saskatoon. We can definitely deal with anything with this in Saskatoon and surrounding area. But don't be afraid that if you're looking in that small town or something outside the city, that we can absolutely help with all that as well. Just to let you know, I have been in the mortgage industry for over 20 years. I've been doing this a long time. I actually did a lot of broker training in my earlier years and trained a lot of brokers in Saskatchewan for many years. And now I've come back full circle and gone back into the broker world myself. So I've been doing this a long time. I know all the tips and tricks and everything that we can do to help you get the best mortgage that fits you properly with the best rate and all the best product and features that come with that mortgage as well. I am married for over 30 years to my wonderful wife, Michelle. I have 2 wonderful sons, Jordan and Austin. They're both finishing up university now and heading back to school. So I know lots of you on this call have young ones that are going back to school. So hopefully that craziness has kind of settled down and we're ready to kind of get back into the buying mode, and maybe find that great property in the fall here to get you all set up. Couple of announcements that I did want to make. As Andy mentioned, we are going to use the chat function a lot tonight. So if you have any questions at all as we go forward, throw those in the chat for us. What we do find is that typically, if you have a question that you're thinking about, there's over 20 people on this call already. There's going to be one or two other people that have that same question. So have the courage to ask that question. We'll do our best to kind of monitor that as we go along. Don't wait till the end. Hopefully, we can get you that answer right away. Okay. Number two is Andy mentioned that booking link. I'm going to repost it back in here. Every situation is unique, especially on the mortgage side. So, what we want to do is really have that call, that talk with you one on one after the webinar tonight. Find out about your situation, find out about your down payment, about your income, about your family, all that sort of good stuff. So we can make sure that we set things up perfectly so that they fit your family's needs and wants. So please make that click on that booking link to make that appointment with us to chat one on one. We'd love to kind of hear your story and get you all set up the best way that we can. One other announcement that I want to make for those of you that maybe follow the financial markets, we did have a Bank of Canada drop today. So, what that means is the Bank of Canada has dropped their lending rate down. This affects the prime rates on the variable mortgage side. So, we've started to see those rates started to come down and normalize. We're right kind of around that 4% mark, which is fantastic. That's really normal for most mortgages here in Saskatchewan historically. And we are starting to see those rates starting to come down and even go under 4% a little bit in some cases. So great time to get in, great time to get a mortgage, great time to get in and get that property. So without further ado, let's jump back in. I'll pass it back over to Andy, and we're looking forward to helping you out.
Awesome. Thanks, Ryan. Okay. So again, just a quick recap. Again, I'm Andy Goddard, the real estate agent, realtor here, and Ryan is our mortgage broker. So finance, real estate, all that, we're here to help for every way through. So we're gonna get into this now. We have a lot to cover, like I mentioned. We're gonna try and be wrapped up by 8 o'clock. Might go a little bit over, depends on what we have to go over. We are sticking around after this to answer any questions you guys may have too. So um, first and foremost, I kind of want to give you a quick roadmap of what it looks like from start to finish when it comes to buying your home. Kind of the things you look for. Now, again, this is a very, very condensed version, and there's so much that goes into it from start to finish. But I just want to give you guys that idea of what it would look like, and then we can go from there. I can't cover this all into this, or we'd be way over time, but just really quick, when somebody asks me whether they're renting or they're still living at home with mom and dad, or they're new to Canada and they're like, what do I do to buy a home here? And so what I kind of tell everybody is, great first steps, come learn everything you can, get it from the right source of information, right? Like I said, there's a lot of misinformation out there, but come to a really good source. That's why we put this on. But the very most important step when it comes to buying your first home, especially if you don't have the cash to buy it, which the majority of us don't, we need to have a pre-approval for a mortgage. Okay, that's very, very important. There's two reasons why that's the most important step. Is number one, it tells us that you can actually are able to get a mortgage, and it also tells us what range of affordability is. So we know how much you can be approved up to, whether it's 300, 400, 500,000, so on. It'll give us that number that we know that we can shop within that range. Okay, we want to keep expectations where they're supposed to be. And it's very, very important we have that. We don't want to be kicking people out of their houses to look at things that we don't know if we can even purchase, right? And it also helps when writing a competitive offer, that if the other agent that we write an offer to, they ask me, are your buyers pre-approved? And if I say no, there's a very good chance they're going to say, well, we don't know if you can buy this place then, so no, we're not going to accept this, right? So we want to make sure this is all in place. So and we'll get into all that right away here on what it takes to get pre-approval. But once we have that in place, then we sit down with you and we kind of discuss what kind of property do you want? Are we looking at condos? Are we looking at duplexes, detached houses, new builds, right? What certain area of the city do you want? What do you need and what do you want in your home? Then we kind of tailor a search for you, and then I start sending you options that are on the market. We can look off market if needed, right? And then we go and tour these places. There's nothing more important than house shopping than getting into the property and actually physically see it, because pictures only tell you one little short story. We need to see the full view, and then I can show you things to look out for in the house, each specific property. Maybe there's issues, maybe there's something good about it, right? I point all those out to show you what you need to look for as a first time buyer, right? And so once we find that right place and you really want it, you want to write an offer and buy it. So we write an offer. I walk you through the entire steps of writing an offer, writing a very competitive offer that's going to help you win it, right? We can negotiate where it's possible. You know, sometimes when we get into heavy markets like spring and um, the spring and summer market, it gets really chaotic. So we want to make sure that we write these strong offers. But if we have room to negotiate, we 100% will try and save you some money. So once we have an accepted offer where both you and the seller agree to a price and all the terms, we go into a condition period. So it's usually about 2 weeks. That gives Ryan time to finalize the financing. And it also gives us time to do a home inspection and review any condo documents and any other inspections we need to have so that you're satisfied with the house before we proceed any further. But once everything is satisfied by you, financing is good, home inspections are good, condo reviews are good, then we remove the conditions and it becomes a firm sale. All that we're doing now is we're just waiting to move in, which it could be anywhere from 2 weeks, a month, 2 months, and so on, depending on each property. But once we're waiting, you meet with a lawyer, you sign all the paperwork to transfer the title into your name, you pay him the rest of the down payment and the closing costs at the lawyer's office, and then on possession date, I get word that the keys have been released. I meet you at your new place. We do a very good walkthrough, make sure all is good, and then I hand you the keys, and you're now a new homeowner. So again, there's a lot that goes into that. Each step, there's so much that goes into it, but the goal and the job that Ryan and I have is that at every single step of this, we literally hold your hand the whole way through, make sure that you know exactly what's going on, what you're signing, what you're having to do, what's the next steps, and to make sure it all goes smooth and there's no issues, okay? That's basically all it is in one shot. Again, there's so much that goes into it, but if you have any questions on it, again, anybody has any questions, throw it in the chat. We're happy to answer it as we're going through. If you want to just talk one-on-one, book that call with us. We'll be happy to sit down with you and discuss that more personally. But yeah, so the main thing, and we're going to get into it, there's a few mistakes that people make when it comes to buying your first home, and I'm going to run those through here, and that's what's going to take the bulk of it here. But so the mistake number one in buying your first home is, like I mentioned, not getting a pre-approval. Again, the two main reasons. Number one, it tells us that you are able to actually get approved for a mortgage. That's the main step. And number two is it tells us the range of affordability because there's nothing worse than shopping for a $500,000 house and getting your hopes up. And then you find out after you're approved for 450 or 425, right? That 50 to $75,000 difference in a house is a big difference, right? So we want to make sure those expectations are where they're supposed to be. Get this done first, then we can start shopping in your range. Okay. Oh, so what makes up a mortgage? That's what's going to be the most important thing. And now again, like Ryan mentioned earlier, this is not a one size fits all thing. There's a lot of gray areas with this. This isn't black and white. This is just strictly the three main things they look for, but there is so much that can be done. Um, to work with you, right? There's so many different ways we can go with this. And just because you and let's say your neighbor work at the exact same job for the exact same pay and the exact same hours, your pre-approvals, your mortgage amounts can be drastically different depending on your lifestyle and what you have for debts and income or debts and certain things like that. Maybe there's child tax benefits, anything like that. So when I'm going through this, if there's a part where you think, well, maybe I can't get this, don't think that way. Give us a call, talk with us, and we'll let you know if it can or can't happen. If our goal is to get it done, but if we can't get it done, we're going to put you on a plan that's going to get there as quick as possible and what you need to do to work on it. Okay. But this is the three main things that need to work together. If one of these doesn't work, none of this works. Okay. So the very first thing, especially in Canada here, is credit. Credit's always going to be a big thing. You are borrowing a large sum of money, so they need to know, are you good with borrowing money? Do you have a bunch of loans? Do you have a bunch of credit cards? Are those credit cards maxed out? Are those line of credits maxed out? Have you had bankruptcy, debt consolidation, right? They need to know how you are with borrowing money, right? Your credit score is going to be a big factor too. The minimum you need to have is 620 to 650 as a starting point. Anything up from there is great. Anything lower than that, then we may have to look at different options. But 650 is pretty much your bare minimum for credit score, right? So we want to make sure there's no crazy credit issues and things like that. Next is obviously going to be your income because they need to know how much can you afford to pay them back. They aren't going to use 100% of your income because then you're going to have nothing left over for bills, utilities, cars, food, things like that. So they use a percentage of your income, but that's going to factor in how much you can afford to pay back. So basically, typically what they want to see is 2 years worth of income tax statements. That's usually what they want to see. If you're working a salary position, we can get a letter from your employer that states this is your salary, whether it's a monthly salary or a yearly salary. If you're working hourly, we could have a job out of the states you make X amount of dollars an hour and you're guaranteed 40 hours a week or 32 hours a week. That's what they need to see is guaranteed income and guaranteed pay, right? That's the big thing. So if you are working a job that is self-employment, strictly commission-based, jobs like skip the dishes, Uber, DoorDash, things like that, things that you can make your own hours, those will not work unless you have 2 full years of income statements from that job, right? So if you just started doing Uber 4 months ago, that's not going to work. They need to see a steady, guaranteed pay in hours, okay? Just so you're aware. Now, again, this isn't a one size fits all. Just reach out to us. We'll talk with you about it, but that's generally what they want to see. If there's any, of course, there's going to be people from new to Canada that are on here. If you don't have the 2 years worth of income statements, that's okay. There is new to Canada program out there. It doesn't change anything. You don't get any different rates or anything like that. It just helps give you more of a background of income and credit and things like that so they can lend you and have more peace of mind. Ryan will get into that some more here in a little bit. So don't worry about that part. And then, of course, the final piece, which is usually the harder part for a lot of people, is a down payment, right? So minimum down payment required for buying a home in Canada is 5% of the purchase price. $200,000 is 10 grand, right? 300,000 is 15, 400 is 20, right? So that is going to play a factor in how much you can get approved for too. And reason being, if your credit and income are stellar and amazing, and you could be approved up to, let's say, 5 or 600,000 based on just that, but your down payment, you have about 20,000 saved up, then you're only going to be able to be approved for how much your down payment lets you. So that would be about a $400,000 house. Okay. So that will affect how much you can get approved for as well. That's how all these three things work together, but they all have to work together in order to make it work. I do see somebody ask about a contract job. Contract jobs do work. It just depends on what's in your contract, when you're going to be renewed, things like that. But that's something we can talk about later on and discuss that too. But that's like I said, there's so many different factors when it comes into it that just because you think you might not, there is ways we can work with things, right? So that's just another different area. Contract jobs come up lots, so don't worry about that. Um, so yeah, back on the down payment part, there is 3 to 4 different ways of getting a down payment. Number one is the most common and most obvious, which is your own savings. So if you have a bunch of savings saved up, we're going to use that. If anybody is new to Canada and they don't have, you don't have your money here in Canada, it's still at your home country, get it over here as quick as you can and let it fully sit here in full for 90 days. It has to be in Canada in a Canadian bank account, untouched for 90 days in order to use it. If you just brought $30,000 over last week, it has to sit for 90 days in order to use it. So just be aware of that. Again, Ryan will touch more on that. The second way of getting a down payment is if you have RRSP saved up, you are able to borrow up to 35,000, sorry, not borrow, but take out 35,000, sorry, I was wrong again, 65 now. It used to be 35, it's now 65. You can take up to 65,000 of your RRSPs out to use as a down payment per person. So if you and your spouse are going in together, that's what, $130,000 you could take out. If you are planning on using your RSPs, please talk to your provider who has them. Let them know that this is what you're doing. They'll explain to you what you need to do. And there is stipulations of you having to pay it back in certain installments over the next few years. So make sure you understand how that works too. But that is an option. 65,000 worth of your RSPs you can take out as a down payment. The third option is what we call the bank of mom and dad. So you can actually get a down payment gifted to you from an immediate family member, whether that's mom, dad, grandma, grandpa, brother, sister. Those ones can gift you a down payment and just say, we're giving you this as a down payment. They write a letter out, and that works too. If it's aunts, uncles, cousins, best friends, that doesn't work. Immediate family members only. Okay. And the fourth way is a little bit more inclusive. So if anybody on this webinar with us is part of the Métis Society of Saskatchewan. The Métis have a first-time homebuyers program where they give you up to 15,000 for a down payment, and they have some closing costs that they're covered. So if you want to know more about that and how it all works, let me know. I can give you the information and who to talk to, but it works just the same with Ryan. You get the down payment approved by them. You take that to Ryan. Ryan uses that down payment and mixes it with yours if we need to and go from there. So again, lots and lots of options. Reach out to us, let us know what your situation is, and let us see how we can help you guys. Book a call with us, and just see what your situation is and how we can help you. But the nice thing about pre-approvals and mortgage approvals is they're underwritten. So they're going to review your income, your credit, and your down payment source. So they're going to make sure that that everything is legitimate, but it's reliable and it's going to tell us that maximum qualifying amount. That's what we need to know. I need to know how much we can shop for. And if we do write an offer, I know that we're going to be in that right range. Okay. I'm glad that I see all these questions coming up. There's going to be a lot coming, so keep them coming, you guys. We got lots to cover here. So then one last thing on the pre-approval side of thing, then we're going to jump into the new to Canada stuff. Um, Co-signers have come up a little bit, so maybe your credit's not so strong, right? Maybe there's some income issues, things like that. You can ask an immediate family member to co-sign for you. Basically, we're just saying they're going to kind of take over and say, look, we're kind of saying that we're going to help with this. So you can ask for that. The co-signers, there is a bit of a risk for the co-signers. Obviously, if you aren't paying your mortgage, then they're going to come after your cosigner to pay it. So there is risk that way. So we want to make sure everybody is aware of what's going on. And the cosigner will be on the mortgage with you and on title with you. So they're going to be on it for as long as you can't get approved on your own. But once you can get approved on your own, you can actually remove them from everything and then it's yours and yours alone. There are no extra costs to have a cosigner when we write an offer and get and buy a house. The only extra cost you're going to come into is if you decide you want to remove them from the title of your home, then you have to pay a lawyer to do that, which could be around $700 or $800 to do. But if you decide, you know what, we'll just leave them on, and then when we sell this house, it'll remove everybody off title, then we can go and buy our own house without them on it. So it's different options that way, but just be aware that this is an option if needed, and make sure that the person that's co-signing for you, again, immediate family member, so mom, dad, brother, sister, grandma, grandpa, they have to still have income, reside in Canada, whether it's a PR, Canadian citizen, right? They have to be here and working or have some income, right? And be approved for the mortgage with you guys. Okay. But again, if you need any questions on any of this, write in the chat, book that one-to-one with us. We're happy to go over all different options with you. Okay. So many options. But that's pretty much the basics of the pre-approval. Again, basic, very basic. So much goes into it. That's just a bit of it. Find out more with us. Let us see how we can help you and go from there. But what I'm going to do right now is going to transfer it over to Ryan. He's going to talk about the New to Canada program and what it can do for you guys. All right, go ahead, Ryan.
Perfect. Thanks so much, Andy. Yeah, we're actually starting to get some questions on that new to Canada program. So this is the timing is perfect. I know that Agnes was asking a little bit about that. So in Canada, actually, like one of the biggest segments of the first-time homebuyer market here in Canada is that new to Canada program. We have a huge amount of immigration coming into Canada every year, like 1 million to 1.5 million coming into the country every year. And that is one of the largest drivers of the Canadian economy is that new immigrant population coming in, spending money, bringing money into the country, generating housing, taking new jobs, things like that. So the government realizes that this is a huge driver of not only the economy here in Canada, but also the housing market. So they've kind of designed and really created this new to Canada program specifically for our new immigrant friends coming in from other countries. Now, what we typically want to talk a little bit about is those three pillars that Andy had talked about: the income, the credit, and the down payment, and how they really relate to that new to Canada program. Now, really keep in mind that this is for people that are fairly new to the country. We realize you're going to be fairly new to your job. We realize you're going to be fairly new to Canadian credit. This is kind of how that program is designed to work for you. Now, typically, the new to Canada borrower will have immigrated into Canada within the last 5 years. Really, anybody that's been here after 5 years or longer than 5 years likely has, if not their PR status for sure, but they possibly are going to be Canadian citizens already by that time, and they're also going to have built up Canadian credit. Now, typically, what a lender likes to see is under a normal borrower at least two trade lines, like two credit cards, two lines of credit, things like that at a minimum, and have those running well for at least 2 years. Now, of course, being a new to Canada borrower, you're not going to have that Canadian credit right away. So, what we really want to do is find different options for you to establish that credit and really have a look at that newer job history. So that's really where this comes in. So what we're going to talk a little bit about is that employment stuff right out of the gate. Now, the applicant does have to be in Canada. This is kind of important. You have to be either on a valid work permit, which has at least 183 days left on it, or be here on a permanent residency status, your PR status. So those are kind of the two areas that really are you have to be fall into one of those two categories. Now, I get asked a lot, what happens if I'm here on a student visa and I'm here going to university? Unfortunately, those don't qualify. What the government found was that most people that have come in here studying abroad, they actually went a lot, like over 80% of them went back to their countries of origin. So the structure of them staying in Canada just wasn't there to warrant them using the student visa. But PR statuses for sure and work permits, 95% of those people stay in Canada. So obviously that was the really the focus of the program. Okay. What they're really looking for on the employment and income area. Valid 3 months full-time employment unless you are a corporate relocate. Now, we have seen a lot of good luck if you happen to be on a probation or something like that. And you have been in the country a little while, those have tended to pass through and get approved by the lender. Now, the big thing that we typically want to see is that you've been here at least 6 months, because you're going to need that to establish some sort of a credit history, up to that 5 year mark. So we'll talk a little bit about the differences between when you are here for over 6 months and when you're here up to over a year. They're a little bit different. Okay. Now, you do have to be paying income tax in Canada. So you have to be at a job that is with a Canadian employer, that you're paying Canadian income taxes to be able to qualify for the mortgage as a straight income. If you are self-employed or anything like that, what they do look at for self-employment is that you have to have, because that's self-employment, there's no guarantees on the income, that there is a 2 year history of you claiming self-employment on your Canadian income taxes. One of the big questions that we get asked a lot is, well, hey, Ryan, I've come to Canada, but my spouse is still in our country of origin. Can I use that income to qualify for the mortgage? Now, unfortunately, we cannot use that income to qualify for the mortgage. The big thing is spousal or overseas income. We can't qualify it. We can't call the employers. We can't make sure that they're reputable companies, things like that. So, unfortunately, unless the income has a 2 year track record, for overseas income, a 2 year track record of it being claimed on your Canadian income taxes, unfortunately, we can't use that income here in Canada to qualify for the mortgage. Okay. Now, at the bottom there, you see the expiring job contract. So if you're hired on some sort of a contract basis. And by contract, we mean something that is expiring. So lots of people will have a job contract. You'll get an employment offer, even if it's full time permanent. That's fantastic. What we mean by expiring job contracts is that they might only be for a year. So you might get hired by an IT company, but it's on an expiring contract, and that job is only good for 12 months or 6 months, things like that. So what they do ask for is typically a 2 year track record of that being you working with that company. But what we have found is that at least if you have that contract renewed at least one time, most lenders are okay with moving forward with that. So watch kind of the expiring job contracts. Watch out for the self-employment. The other thing to watch out for is that any job that, as Andy mentioned, that does fluctuate. For self-employed, if you're an Uber driver, or if you do DoorDash, if you started your own company, if you have some sort of a bonus structure to your income, that it floats up and down and it's not a structured income. We do need a 2 year history to qualify that, just to make sure there's some stability and some consistency to that income. Okay. Now, the next pillar that we want to talk about with the New to Canada stuff is the credit side. Now, for the credit requirements, as mentioned, the New to Canada program does take into account the fact that most borrowers are fairly new to the country, will not have a lot of established credit yet. Now, what we do need to do is still ensure that they are a good credit risk from the bank's perspective. So, if you have immigrated into Canada within the last 12 months, really realistically underneath 1 year, but over 6 months. Okay, so 6 months is kind of the barrier. What we want to do there is what you have to do is put down 10% for the down payment. FYI, normal down payment in Canada has a minimum of 5%. So if you've been here kind of between that 6 and 12 month mark, it's still a little bit higher risk. So they do want a little bit more down payment at the 10% mark. But what they actually will use for credit requirement instead of credit cards and lines of credit and things like that is they're going to have a look at your bank statement. So they're going to look at your primary bank account. They're going to say, okay, the pay goes in, all the bills are handled well. Yes, that's a good credit risk. We show them 6 months of consecutive good bank statements with no missed payments, things like that. And boom, that's your credit requirement for the mortgage. So, really quite easy there. So, if you're here between 6 months and 12 months, 6 months of bank statements works great. Okay, so that's what we're going to do to get your credit requirement met. As long as you've handled your bank account quite well, we're going to approve you on the credit side. Now, once you have been in Canada over that 12 months, so I mentioned the 6 to 12 months needed 10% and the 6 months bank statements. Once you've been in Canada over that 12-month mark, it's almost more of a traditional down payment. So you do qualify for that 5% minimum down payment. But again, we really won't have a lot of credit established, probably under 12 months of credit established to show. So we still do need to show you some credit strength. Now, what we do there is we show 12 months of good repayment on your rental. So typically, if you're a first-time home buyer, you're renting somewhere else. So what we would do is show 12 months of a rental payment history, good rental payment history. Typically, we can do that by getting a letter from your landlord and bank statements to show that your rent has been paid on time for 12 months. And then one other structured payment for 12 months. So that can be anything like a power bill, a Sask energy bill, a Shaw cable bill, plates on your car through SGI, a phone bill through SaskTel, anything like that. So anything that has a structured payment on it for 12 months, if we can show 12 months of those statements showing that all those payments have been made on time, boom, that combined with your 12 months of rental history and your credit is good to go if you've been in Canada over that 12-month mark. So realistically, two great options depending on how long you've been in the country to get your credit established. But we can get you in typically as early as that 6 month mark once you've landed in Canada to get you right into a home. So some great requirements for that New to Canada program that will get you in quicker than usually that 2 year mark. Okay. Now the last pillar, of course, that we want to talk about is that down payment side. Now, if you, again, as we mentioned, if you've been here less than the 12-month mark, we do require that you put down 10%. That can come from any of the down payments that Andy mentioned, savings, RRSPs, gift from family. It does have to be an immediate family member, so know that that is mother, father, grandparent, child, or legal guardian. That's kind of what those down payments have to come from on the gifted side. If you can get any of those, if you're here on a Métis grant, anything like that, those things work. But we do have to have 10% if you are here less than the 12 months. Once you have been in Canada over that 12-month mark, you can put down the Canadian minimum, which is 5%. Okay. Now, again, the big thing that we want to talk about is those down payment options. We do hear a couple of, especially with the new to Canada stuff, a lot of people have funds that are still over in their country of origin. And that's kind of really where I want to talk about the creativity that we can get involved there. So, again, if you have the savings already over in Canada, what they typically do is look for 90 days of that savings account. So that's in a bank savings account, if that's in a first home savings account, a TFSA, anything like that, those are all considered your own funds or your own savings. So we'll have a look at a 90-day history to that account and watch the track the money that's gone in and out of that account to make sure that there's a 90-day history of it. Again, the gifted money from an immediate family member. If you are bringing money over from your country of origin still and it's still over there, we can do that still. But what we will look at is uh, we'll track the 3 month history of your account of origin in your country of origin. So we'll get a 3 month history of the bank statements there. The funds do have to be transferred into Canada. So usually they want them here at least 30. Some banks actually like 90, but we will watch for the money to be transferred into your Canadian bank account. Typically, that's done through a wire transfer. So we'll get the history of the funds in your account of origin from your origin country. We'll get the confirmation of the wire transfer into your Canadian bank account. And then we will get the statements from your Canadian bank account showing that the money has landed and has been sitting there ready for a down payment. So we can still do money coming in from another country, just a few more steps involved to track the money for the 90 days. Okay. Um, I did get some questions on the new to Canada from Agnes. Hopefully that did answer some of the questions that you had, Agnes. I know that you mentioned contract in your income. I'd love to talk to you about that. So if you wanted to book a call with Andy and I, we can talk about that specifically. If it is an expiring contract, we'll find out what sort of a job you're in and see what options we do have for that. And if nothing else, we will find a great plan to get you established to get you into that mortgage as soon as your income would qualify. We'd love to talk to you. So as you can see, some great options for any new to Canada borrower coming in, and every situation is very, very unique on the new to Canada stuff. So please make sure that you do click that booking link. We'd love to kind of talk to you one-on-one, hear your individual situation, and come up with a solution that really fits you and your family best. All right, I'm going to pass it back over to Andy to keep rolling away on the rest of the webinar. If you have any questions, keep them coming in that chat box for us.
Awesome. Thanks again for that, Ryan. Lots of information on the new to Canada stuff. So again, if you guys, like sometimes so much information just kind of goes in and goes out. So again, this is recorded, it'll be sent to you, but also book that call with us to refresh anything. There it is again. But yes, lots and lots of options. So I'm going to cover a couple more things here, and we should be able to wrap up by 8 o'clock here and hang around and answer any more questions we have. But one last thing on the finance side of things is a mistake is using your bank. Now, this comes up all the time. Honestly, it does. Everybody uses a bank, whether it's RBC, Scotiabank, CIBC, so on and so forth. There's nothing wrong with whatever bank you choose. Honestly, there isn't. My dad has been the general manager of a credit union for since I've been alive. He's going to be retiring next year. I don't have a thing against banks. I honestly don't. But there's a reason why I have Ryan on here with me. There's a reason that Ryan and I have worked together for years. Is because Ryan does some amazing work, and I'll explain in full detail why it's important to use a mortgage broker, essentially Ryan, to do this for you instead of a bank. Okay? So the differences between a broker and a bank. Ryan has access to over 30 different lenders' products. Okay. He's going to shop around to different lenders to find you the best rate and program. Okay. It's huge. Whereas the bank are restricted to their one product, right? RBC has one, Scotiabank has one, CIBC, and on and on and on, right? They all have their own in-house product. Ryan, if you say, you know what, I like Scotiabank though, we've used Scotiabank for a long time. We would like to stick with them. Just tell Ryan, he's like, okay, we'll work with Scotiabank, right? He'll just go work with them, but still get you really good rates and programs, and you have the personal experience and somebody who's going to be taking care of you, not the bank. Okay, that's going to be the biggest important thing. Ryan works the same hours as I do, right? Real estate is not a Monday to Friday job. It is after the Monday to Friday job. Okay, we work after hours, evenings, weekends, right? So if we're in a situation where we need to write an offer and it's 7 o'clock at night, and I we need a question from the person doing your mortgage. So let's say you are using your bank, and I need to get a hold of them in order for us to write an offer, but I can't because the bank is closed and I can't get any answer and we have no idea. And then we say, okay, well, we'll wait till the bank's open to talk to them, but then all of a sudden somebody else writes an offer and gets that place and you lose out on it. It has happened, which is why I'm talking about this. But what hasn't happened is that when we write an offer and it's well, right now it's 7:45, and I say, Ryan, we're writing an offer for these guys that you have their pre-approval through. What we need something about this, and this. What are you thinking? 9 times out of 10, I get an answer right away. Maybe it's going to take 10 minutes because people have lives, right? It's evenings, but Ryan gets back to me that night when we need him, right? Not when the banks are open. Okay, big thing, especially when it's writing offers. Ryan's going to find you the best mortgage rate up front. This is the best one. Banks are going to offer their posted rates, and you may need to negotiate a better rate, and some people just don't like doing that. Why do it when you have somebody else doing it for you? Right? Like I said, Ryan works for you and your best interest. He wants to make sure you get the best program, rates, and product. Whereas the personal broker at the bank, yes, they're going to work for you, but they also are employees of the bank. So they're kind of in a conflict. So you want somebody who's going to watch out for you. Ryan does not work for a lender at all. Anybody that borrows you money. Okay, so that's why he doesn't work for the lenders. He works for you. Big thing. And again, like I said, you can call or text anytime with any questions. Banks are hard to get a hold of. Trust me, I've dealt with a lot of this where I'm trying to get answers from somebody that works at the bank. I tried calling and calling and calling and calling. They don't answer the phone. I can't text them because it's a business line. So I have to send them an email and I'm trying to wait for their email to come in. And when we're on a time situation and if it's after 5 o'clock and we still haven't got an answer, they won't give us an answer. We have to wait till the next day. Sometimes the next day is too late. And it's happened. And it's not very stressful and it's very hard to deal with. Whereas we just avoid that, and I work with Ryan, and Ryan's never let me down. And I'll say that he was never let me down. Okay. That's why, especially when you're doing this purchase and we need something on a Saturday or we need something on a Friday evening, Ryan's going to be there for us. And it's not just any mortgage broker either. There's a reason I work with Ryan. We've had a guy, this was about a year ago now. He used a mortgage broker out in Ontario. That person had no idea even where Saskatoon was at all. Like didn't have a clue about it. We wrote 3 offers on 3 different very good properties, and all 3 of those got crashed by the mortgage broker. Okay, they just didn't have a clue about Saskatchewan real estate. They crashed the deals. So I said, enough is enough. Let's talk to Ryan. He's local. He knows what's going on here. The first deal we did with Ryan, where we wrote an offer, he crushed out of the park and he got their first house. So it's not just a mortgage broker, it's the right one, which is again is why I work with Ryan, right? Yes, I've worked with some really good people at banks before, but at 9 times out of 10, it's very difficult, it's stressful, and let's just alleviate enough of the stress as there is when it's buying a first home and just get things done smoothly, okay? There's also a thing to worry about with banks is they may have bank penalties when you break your mortgage. Mortgages are 25 to 30 years. Most people don't stay in it for their first house, right? They move, whether they upgrade or they downsize or they move different cities, provinces, countries, right? We don't want to penalize you for just having a change in life, right? Or just wanting to better for yourself. So we're going to make sure you have little to no payout penalties. Can't guarantee there's not going to be any, but banks can be very expensive and we don't want you penalized just for doing a simple change. Okay. So those are some big factors and the reason why I say don't go to a bank to do your mortgage. Use a mortgage broker. That's what they're for. Okay. Banks are good for investments and checking savings accounts and things like that. Get a mortgage broker for a mortgage. Ryan's your guy to call. Book the call with us and we'll talk to you more about that. Okay, we are getting slim on time here, which is okay because I got just a few things to cover on the real estate side of things because the finance is such the big part of buying your first home. That's why it takes up the bulk of this. But I am going to run into a few things on on the bank side of things or on the real estate side of things. So a mistake people make too is buying directly from a builder. So if you're going to look at a new build as your first home, they are becoming more popular, which is why I talk about this, but I don't talk about them a lot. Okay. Buying from a builder is the same as going to a bank. They're going to sell you their product and their product alone, right? Where I can show you different builders. I can show you every builder that's around there, take you to show homes, show you what each builder offers, show you which builders not to go to and which builders to stay close to because they're really good. I'll show you which builders offer different things, which things are included with the new build and which things aren't and how much things cost to go into it, right? People think, well, if I just go to the builder, I'm going to get a deal. That's not true. They have set prices with the real estate stuff put into it. So you're not going to get a good deal, right? The thing you're going to miss out is somebody negotiating add-ons in for you, right? Builders don't typically touch the purchase price. Okay, they usually stand firm on that because they've already built out how much it's going to cost to build it and all that kind of stuff. So let's say they're like, we're going to sell this at 450. That's it, not a penny less. 450 is it. But it doesn't come with appliances. It doesn't come with a back deck. It doesn't come with landscaping, a driveway, a basement, an air conditioner. It doesn't come with any of that because typically new builds don't, right? So then let's say, okay, well, how much does an appliance package cost? And how much does an AC cost? And how much does all this cost? And so let's say an air conditioner and an appliance package came out to $18,000, okay, just for all of it combined. And then we can say, okay, well, we'll give you 450 for the house, but we're only going to give you 10,000 for that $18,000 add-on, or we're going to give you 8,000 for that $18,000 add-on. That way we get a deal and you add in some stuff that's for half price. Or sometimes they'll just try to see if they can throw it in for free. Most times they'll say no, but you never know unless you ask, in which I'll ask, right? But I'll try and get you a deal that way just to negotiate for you, right? You want somebody that's going to do it for you. Plus, if there are issues that come up during the process or after you move in, you want somebody who's got your back to fight for you against the builders instead of you going against the builders on your own. And it's happened before. Things just come up. This is why I explained to it because things do happen and they need somebody to help out. And then I'll get involved and call my lawyer and call the builders directly and say what's going on instead of you stuck trying to fight it and nobody's there to got your back. Okay. That's what we're here for to help you out no matter what. So the cost of buying straight from a builder, you're going to lose the knowledge of the builders, who they have. You're going to lose costs of add-ons that are put in, right? And somebody to fight for you. So it is a big deal. So if you are thinking of new builds, let me know and we can go shop around a bunch of different show homes. I do it lots. I'm doing it tomorrow actually. So very easy stuff. Okay. One more thing. I like that question on how much they charge for your services. We'll get to that. I'm just going to wrap this little bit up here. But since we're on the talk of fees and costs, this is a big one. It's home inspections. Now, if we're going to keep this chat a little bit lively here, can anybody tell me, throw it in the chat, how much do you guys think a home inspection costs for a standard detached house? Just throw some numbers out there. I want to see if we're close or not, just for curiosity's sake. Oh, good guess. I like that. 500, right on the nose. 12, 20 grand. Yeah. Yeah, got some good numbers here. So 500 is actually the closest. So for a detached house, my guy that I highly recommend is 475 after tax. Okay, that's everything in. A lot of home inspectors are doing it for 500 or more, right? But for that amount, like let's say it's $500, which is kind of the average. When you're buying a three, four, $500,000 home, an extra $400 or $500 is nothing compared to the information you get from this and how much it can save you if you don't get one, right? It's so important to have one of these done. I think this should be a mandatory thing, but because there are people that that don't or think um, that think they don't need one, there is a reason they're here and what they're for, and they are worth every penny. Okay. So the nice thing about home inspections, they are a condition in the offer, and a condition is has to be satisfied by you, the buyer. So if we do a home inspection and something comes back major problems with it, we have three options. Number one, you accept it and say, okay, why, whatever, we can deal with it. Number two, you say, no, I want you guys to fix this before we move in. Or number three, actually, there's four then. Number three is we can negotiate money off the purchase price so you can fix it on your own. So if let's say the fix is 3 grand or $5,000 fix, we'll say we want 5 grand off the purchase price of the home, then we'll deal with it, right? Or if it's super major, where it's like major foundation issues that we didn't see, or mold issues or infestation problems, and you just simply say, you know what, this is too much to deal with, we can walk away and go find a different house, and you're in every right to do so. Okay, so there's lots of options as a home inspection comes up. There's a bunch of different every property is different, so there's going to be a bunch of different things every single time. But majority of the time we can rectify it. Not very often do we walk away because of a home inspection, but we get things fixed or we get money off to so we can fix it with our own people. Okay. So this is typically what you see in an inspection. On the right, on the left side, sorry, is a thermal imaging camera. Home inspections are non-invasive. They cannot open up walls. They can't rip things open to see behind there. So they have to use thermal imaging cameras. This is telling us that the insulation is good, that there's no issues with ceilings or there's no moisture damage or anything like that. They have moisture meters and thermal imaging, so we know if there's any leaks or not. They check your electrical because electrical is a big issue when it comes to a house. We want to make sure that the electrical panel is done and wired correctly. There's no weird wiring. But they also go around and check every outlet in the house. Like seriously, every outlet in the house. Make sure it's grounded, make sure they're all working properly, make sure there's no fires, make sure it's all grounded and make sure things are good. Then they're going to check every piece of plumbing in the house. So everything that's got water going to it, sinks, toilets, dishwasher, washing machines, anything that has any water anywhere, they'll check it. And then they also have the moisture meter that can detect any leaks, which they have found in the one picture down at the bottom there, which we got them to fix. Okay. Furnace. Here in Saskatchewan, anybody that's new to Canada has now experienced the Saskatchewan winter. Brace yourself because it's coming. But when we hit those minus 30 days or minus 40 days, you want to make sure this furnace is working and working well because it gets cold. Same with your air conditioner, right? We want to make sure this furnace is working for your air conditioner to pump while it's, plus 30 out there. So they open up the furnace, they check everything in the furnace, make sure all the ductwork is working properly, make sure it's heating and cooling properly, right? In the winter, they can't test air conditioners because there is a certain temperature they cannot test them as it gets lower, right? So sometimes that's harder, but in the summer and spring times, they will check the air conditioner for you. Then they'll check all the appliances for you, make sure those are all working properly. They'll check the roof. They'll go up on the ladder on the roof or use drones. They'll check the foundations as much as they can, the garages. They check in the attic space. There is really nothing they do not check at all in a home inspection. That gets crazy. It takes them hours to do it, and it's worth every penny. But it can cost you a lot of money if you don't see it. If you don't get a home inspection and you buy the home and all of a sudden there's a leak in your roof. Roofs are not cheap. 20 grand easily there. There's cracks in your foundation that are leaking water through. That's easily 20, 30, 40, 50 grand, right? It gets expensive, right? So not getting a home inspection can cost you so much. So again, 400,000 or $400 is worth it on a $400,000 house. Any type of house, it's worth it. Even a condo, it's worth it, right? And again, we have options of walking away, negotiating the fixes, negotiating price, things like that. Okay. All right, we are getting close to 8 o'clock, and which is perfect because I'm just going to wrap this last little piece up because we do buy condos too. Condos are a very good option. So whatever I say in this, don't be scared of condos. We buy lots of condos because they're a very good entry level entry level property, I should say. So, when you write an offer to purchase on a condo, it is mandatory that the sellers provide you with what's called an estoppel package, which is the documents for the condo that outline everything about the condo, how it's run, what the bylaws are, how much condo fees are, how much the condo fees go to different things, right? Who does the insurance, who does the maintenance, who does the snow removal, all that. It tells you absolutely everything, and it tells you the reserve fund, which is a major thing. The reserve fund is how much money the condo has saved up so that if there's any fixes, they have the money to fix it. If there isn't enough money in the reserve fund, Then they do what's called a cash call. So now they need to fix something. They don't have enough money to fix it. So they come to all the unit owners and say, you need to chip in an extra 500,000, $2,000 to fix this, whatever it may be, right? So we want to make sure there isn't that coming at all. We want to make sure that that it's run properly, it's audited, they have the right reserve fund studies done. So what isn't mandatory on this is having a lawyer review it, which is the right thing to do. You are paying for a lawyer to do the transaction. Get them to review this for you. The lawyers that I choose are amazing. Like that I choose, I should say. The lawyers that I recommend are amazing at reading these, telling you if there's any red flags and things like that, or telling you that it's worth the investment. They are very good at what they do with this. And it's highly recommended you have a lawyer review this. We can go over it too together, but again, these guys are trained to go through that and make sure all is good. Okay. Bylaws are very important to read too, because if you do some renos in your condo that are not allowed, they can, if you're caught, they can fine you and you have to redo those renovations to the proper way. So we just want you to avoid that and get this reviewed properly and go over it properly because it will save you a lot of money. Again, how much is it could be anywhere from $1,000, $10,000 and up. Depends if there's cash calls, depends on if there's bylaws that you've broken, right? Things like that. So it is very, very important. Maybe they weren't running the condo very proper and they got audited and they realized they are very, very deficient in the reserve fund, then you can there can be a very major increase of condo fees. So let's say you're paying $400 a month on condo fees, but now they realize they're very, very deficient in their reserve fund and like bad, they could jack them up to $100 a month extra, and that's $1,200 a year, and that just adds up too. So we want to make sure there's no red flags on the property before you buy it. Everything we talked about in here is ways to protect you, the buyer, from buying a bad investment. Any condo, anything, if it has a condo attached to it, whether it's an apartment condo, a row townhouse, a duplex, even detached houses have condos on them. It depends on them. But if you find any place that's attached to a condo, they all have condo packages, estoppel packages. We want to make sure they're all run properly no matter what. Okay. It's mandatory you get a copy of it, but it's not mandatory that a lawyer looks at it, but it should be. But yeah, so again, that's pretty much everything. I appreciate you. If anybody has to jump out now, great. It is recorded. It's going to be sent to you guys. But we are essentially, that's it on our end for what I wanted to talk about. Hopefully, we've alleviated some things, at least giving you guys an idea of what you need to do to start, how to get started, and some things to look for. But again, this is just the very, very starting point. There is so much that goes into this. But the idea is coming from here is that this is how we're going to get you started. But as we go through, we're going to explain everything in detail as we do it. We're going to do everything that we can to explain it properly so you know exactly what's going on at every given time that you can make informed decisions all the way through. Whether it's on the finance side of things with Ryan, whether you're looking at homes with me, right? You know that you're going to be covered. Okay. So I'm going to put this in again. There's that booking link. I want to thank the people that have already booked a call with us. I look forward to talking to you guys. This is what it looks like. You pull up the booking link, it pulls up the calendar, you pick a date, you pick a time, and then we'll have a one-on-one conversation. Nothing gets done during that one-on-one. Like it's just a conversation to see where you're at, whether you're ready to, maybe you're ready to buy now. Maybe you want to get a pre-approval now. Maybe you just want to know if you could get a pre-approval now. Maybe you're ready next year. It doesn't matter. That's all we're doing on that talk is just a talk. We're not pulling credit. We are not getting the process started unless you tell us you want to, right? It's just a conversation just to get to know you a little better and know your situation. That's all it is. But yeah, so again, thank you everybody for joining us. Thank you guys for sticking around. There's lots of questions there. There are some things in there I want to jump in on and answer too, kind of give my thoughts on it now that Ryan's been answering a lot of these. But again, thanks guys. Hopefully it was very helpful for you guys. Ryan, you want to jump in here? We can open forum this thing.
Yeah, we've kind of got all the questions caught up here, Andy. Lots of stuff on the New to Canada program, which was great. I know that we do kind of handle a lot of that stuff. So, for anybody that is in that New to Canada program range, we're very well versed in it. We've done this a long time. I've taught literally seminars on this new to Canada program. I know it very well. There are a couple of things that we need to get set up properly, but other than that, it's a pretty smooth process. And we can typically get most newcomers into the country, into a property right at that 6 month mark. So lots of great options there. Don't think that because you are fairly new to the country that you can't qualify for a mortgage. Let's have a chat. Lots of questions around some income stuff on the condo stuff. With the winter coming up, I did want to touch on that a little bit. I threw my little 2 cents in there, and I'll kind of let Andy, the expert, talk about that for a minute. But I love to buy properties in the winter. We do get asked that a lot. Is the winter time a good time to buy a home? Yes, absolutely. There's lots of great advantages to doing it. Yes, it is cold here in Saskatchewan. I won't lie there. It does get cool. So you may be moving in the cold, but there's some great advantages. Typically, the market slows down a little bit in the winter on the mortgage side and the real estate side. So there may be not quite as many homes on that market. Typically, those sellers are aware of that, and they are possibly just looking at getting out of their property quickly and things like that. So typically, you might be able to find some pretty good price breaks in the winter. When you do kind of buy then. The other option too is that you get to really test out all the heating elements of your house. You get to make sure the furnace is working good. You get to make sure that your home is insulated, all the way through, and there's not cold spots and things like that. So you really get to test out your home in the most extreme circumstances, which is in the dead of winter. So there's some great advantages to going through and buying a home in the winter. I'll kind of pass it over to Andy to kind of get his thoughts on that as well.
Yeah, no, Ryan pretty much covered it on that one. I all my houses I bought in the middle of winter, and it's not because I chose to. It's just that's how it landed on it. But I agree with everything Ryan says about it. We are in winter pretty much 6 months out of the year, and it's a lot more harsh than summer is. So it is good to know that your furnace is working properly, that there's no leaks in the roof, because that's where we're going to see it. That snow sitting on your roof, it does with the heat of the house. If you know there's a leak in your roof, you're gonna know it by then because the heater's gonna hit that. It's gonna melt into your roof, and we're gonna know. So it's very important. The only downside to the winter is it's hard to see shingles, right? That's the hard part is we can't see shingles if the snow is covering it. Home inspectors do go up there and they kind of wipe a little bit away, but we don't get the full view of it. So there is give and take on the seasons that you buy in, but winter, you're going to see less competition for buyers, but there also is less homes on the market, so it's kind of a trade-off. But every season is different, has its own set of challenges. So it's basically whenever you're ready to go, we're gonna deal with it then. But I do like winter shopping. You want to drag me out at -30, I'll fire up the car and we'll go see how things are working. I've actually showed a lot of houses in the middle of winter, and you'd be surprised how many of that I have to text the other agent who has it listed saying, "Hey, look, the furnace isn't working in here. It's like super cold," and they had to get the people to come in and fix it. So it happens, and it's good to know that. There was one thing I want to touch. I got some questions here. There's one thing I wanted to touch up here. I think I might have missed or just trying to figure out what to say, but um, there's somebody mentioned about looking at properties and things like that. And again, another misconception we get a lot as realtors is that maybe there's only certain realtors that can show certain houses, and that's again very, very untrue. If it's listed with any brokerage, it doesn't matter if it's Royal LePage, Realty One Group, EXP, um, whatever, Remax, whatever. It doesn't matter who lists it. If it's on the market, myself as a realtor and any other realtor can look at any property. So just because one person has it listed doesn't mean we can. We look at everything and can see everything. Even off-market properties we can go look at, right? So there's nothing I can't show anybody, right? So that's just a big thing I want to touch on. But now going back to this question down here.
Sorry, I just wanted to touch on that quick, Andy. The other thing about that too, and we get asked this a lot. When people assume that they have to call that listing agent, absolutely not. We want to make sure that you're using an agent that represents your best interest, right? So, for example, the listing agent is working for the seller. So if you call that listing agent, they are already working for the seller's best interest. So if you're calling trying to negotiate the best price, negotiate anything on that property or in that offer, that listing agent is already committed to the seller, right? So they might be able to slightly mitigate certain things, but they are not going to be working on your side only. So that's why we want to make sure that you have great representation with Andy working all the way just for you in that transaction. So if you do have any of those, and it's something that maybe that you've seen that just came on the market or you looked at, send it over to Andy. He can set up the appointment and you can go view it. But you absolutely use Andy because he can make sure that he's negotiating everything and all his power on your side to get you the best deal and the best terms on that contract offer. Yeah, so the great question here from Shantanu. My apologies, I'm probably butchering that name, Shantanu. We are reading a lot about the Saskatchewan and especially Saskatoon market being overheated. Absolutely, very true. It's across Canada actually. We are actually one of the most stable markets here in Canada, in Saskatoon, believe it or not. Prices are very high and supplies alarmingly low. How do you see the market going forward? What's your forecast for Saskatoon? Are prices going to remain high, expected to go higher, for instance, today versus the winter versus 2026? So I think what you're kind of getting at is now a good time to buy, or should we wait maybe for the winter or for the spring? I will let Andy, I will pass this over. He is absolutely the expert here. I will throw my 2 cents in there quick. Typically in real estate, prices don't go down. We are in a market in Saskatoon and Saskatchewan, but Saskatoon specifically, that is one of the most, it's in the top three stable markets in the country. Ottawa, Winnipeg, and Saskatoon are the top three most stable markets in Canada. We've actually just started to catch up. So you talk about prices being high. Yes, but comparatively to Calgary, Toronto, Vancouver, Edmonton, things like that, we're still very low. What we have seen a bit of a price increase for sure over the last little while, but we are almost just catching up. Our prices were so low in Saskatoon, previously in history. So we are starting to catch up to some of those sister markets, the Winnipegs, the Edmontons, things like that, that are very sister cities. So we don't expect those prices to drop a ton. But I will pass it over to Andy and get his absolutely fantastic opinion on that as well.
Yeah. No, it's Ryan's kind of hit it on the head there too. Yeah, we have been Saskatchewan's been predominantly one of the cheapest markets in Canada. Yes, prices have been going up. We that is a lot of factors due to very, very limited inventory. So when that spring market hit this year, I know a lot of people heard like, oh, there was like multiple offers and it went 70,000 over asking price. And yes, that was true. I've dealt with it. I've won some offers that were 5,000 over asking. I've lost some offers that were 45,000 over asking, right? It was chaos, but I'm going to throw a lot of stuff at you here because there's a whole whirlwind of stuff. Is that now that the summer's over, things are back to normal, we have seen a massive slowdown on that. It's a lot more easier to look at places. It's not as nearly competitive as it was. We're seeing a lot of things like where we used to do what's called a presentation of offers, where you list a house and then you give a few days and then everybody would submit their best offer. I've seen lots of those happening now that nobody's getting offers on it. Things have slowed dramatically down. Prices are still a little bit up there, but we see a growth of about 3% for a detached house year over year. So every year you're going to see about a 3% increase in value for a house that hasn't been touched, right? You buy it this year, it'll be worth 3% next year, right? It'll be more that way. So this is kind of where it gets really, really kind of clouded is when people say, well, should I wait till next year? And I always ask them why. What's the benefit of waiting next year? Right? They say, well, maybe the interest rates will come down a bit more, and which that could be 100% true. They could come down next year. But this is where it comes into effect. The mortgage rates come down, increases the amount of buyers. The amount that's on the market hasn't changed, but now there's more buyers, which means it's going to be more competition, which is going to make the price go higher. So when I tell people if you're going to wait, chances are it's going to be more you're going to have a lower interest rate, but the property value is going to be higher because it's 3% year over year. Plus, there's going to be more buyers on the market. So it's really hard to say what is it going to happen next year because most likely it is going to go increase next year. Could have lower interest rates, which means more buyers. The other thing is, myself included, there's going to be a lot of renewals. We're pretty much getting out of the COVID rate renewals coming into effect now because I'm still locked in from 2021. That was at a low interest rate of like 1.9, right? So all of those places are going to start renewing to the normal that we're here around the 4-ish%, right? And so that could affect a lot of people deciding I'm going to sell now because now my price of this house or the amount that my payments are in this house are too high. So now we're going to have to sell and downsize. So it is going to affect a lot of things in the next year. What that's going to look like, it is very hard to say. But typically for Saskatchewan, I know this is a lot, and I'm sorry to throw a lot at you, but typically with Saskatchewan, we see just a steady growth year over year. We don't see the peaks and valleys, steady increase. So, and we're not really foreseeing any change in the foreseeable future of the limited inventory yet. But again, with these new renewals coming into effect, everybody's going to be on the same playing field now. All those low interest rates are going to be gone. So we might see a bit of a swing here in things. So that's kind of what I got for that. Yeah, like Ron says, they're kind of the normal now. So now that we've got all those, because a lot of sellers weren't selling their houses because they were in a 1.5, 1.9% interest rate. So why would they sell their house to go into something that's got a 4% interest rate or a 5% interest rate? But now that everybody's kind of leveled out and the same, now we might see a more difference of how many properties come on the market, if that makes sense. So again, sorry, I did go on a lot with that. There just is a lot that goes into that, right? Instead of just an easy, this is what it looks like. But hopefully that answered a little bit. We are still in a very low inventory market. It's just that hasn't changed anytime soon, hasn't changed the last few years, but we still have helped many first-time buyers buy great investment properties, get them in there, start building that equity into something else, right? It's still very, very possible. But yeah, I don't know. There's no, if anybody's got any more questions, throw them out here. I don't know. I'm trying to think if there's anything else I'd want to touch on first, but I like what Ryan said about representation with sellers, right? So if you see that there's a property listed, yes, Ryan was 100% correct. That listing agent does have a duty to the seller. They are going to watch over for the seller, get them the best. The idea is if you go to sell your house, and let's say, Andy, come sell my house. My goal, my job instantly becomes how am I going to sell your house for the most amount of money for you so you can pocket the most amount and walk away and find your next good purchase, right? But then if you decide I'm going to go buy that house and I'm going to call that listing agent, how are you going to, like Ryan said, how are you going to get a deal if his job or that agent's job is to get the seller the most money possible, right? So then that's where I come in as the buyer side agent and say, I'm not going to give you the most possible. I want the least amount possible, right? So that's the whole idea is why you want the right person representing you, not just call the guy on the sign, because you're definitely not going to get the best deal and you're not going to get a lot of, we're not allowed, when we help buy and sell a house at the same time, it's a dual agency, it's called, and then we stop being able to give the proper advice because we can't say we're not allowed to tell the seller anything about the buyer. We're not allowed to tell the buyer anything about the seller. So we can't really advise properly. That's why it's just so much easier to have your own representation. Take somebody like myself in there and say, Andy, let's get this house, get us for the best deal. And that's where my job kicks in. So but yeah, that's kind of what I want to touch on. Thank you guys for if you guys going to jump out, absolutely. We're pretty much going to wrap this up, I think, anyways, because I don't think we had a lot more questions. But for all the people that have booked a call with us, I appreciate it. I look forward to talking to each and every one of you. If anybody's got anything else they want to ask, throw it out there. Ryan, if you've got anything else to add, go ahead. If not, we may be able to wrap this up earlier tonight.
Well, thank you so much for the pronunciation thumbs up there. I appreciate that. Yeah, the biggest thing I would want to say, guys, is reach out, say hi. We, even if it's not the yes, I'm ready to go today. I want to get my pre-approval in shape. If it's just a conversation, sometimes just having the direction, there may be some certain steps that you need to get set up You might say, hey, Ryan, my down payment is still in my country of origin. We'll go through the steps on how to get that here and some of the timeline requirements. It may be I don't have a job yet, but this is kind of what I'm looking at in my field. We would make sure that we get that timeline set up for you. So it's really just about starting that dialogue, us maybe going through, asking a few questions, finding a little bit about you and your family and your situation, and offering some advice and some help to get that process moving in the right direction, putting some of those stepping stones in place for maybe an early 2026 or a spring 2026 possession on a new home. So give us a call. Let's have a chat. Let's at least kind of get you moving in the right direction and get you some advice. So looking forward to talking to each and every one of you. Looking forward to connecting. And yeah, click that booking link. We'd love to talk to you.
Awesome. All right. Well, I think if that's the case and no other questions, we are going to wrap this up. So again, thanks everybody for being here. Thank you again, Ryan, for joining us and helping out with everything too. And yeah, you guys enjoy the rest of your evening. Have a great weekend and all that kind of stuff. And look forward to talking later.
Take care, guys. Have a great night.
See you guys.